morning. This is George Kachuk with RCM Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Here we are in the middle of July. Earnings are underway, and that's pretty much driving the market. Of course, we still have some headline risk. But let's take a look at the equity markets, what's going on. We've been pretty much in an uptrend, but right now that uptrend has turned to a condition we call it uptrend under pressure. And the reason I say that is we have a buildup over the last 5 weeks of 5 distribution days. Now, if you recall, a distribution day is a day of heavier selling on the indexes where the volume is larger and the indexes turn down. Now, why that's important is because anytime you get a buildup of these days, anywhere from about 4 to 7 days, the market does tend to spill over into correction. Now, there's no time. It's a 3%, 5%, 10%, 20% correction. We don't know, but it's just something to keep in the back of your mind that we do have some selling pressure going on in the market. And actually, 4 of those distribution days in the NASDAQ has happened over the last 2 weeks. And this was pretty much going on prior to the disaster that happened over eastern Ukraine last week on Thursday, where the Malaysian airline was shot down by the Russians. Okay, so what's an investor to do? Well, when you get an uptrend under pressure, it's a good time to maybe take some profits off the table, sell any losers you have, and raise some cash. And that's basically what we've been doing. However, despite this uptrend under pressure, the market has not really given up, nor has any major top formed, meaning leading stocks still continue to lead. And that's the second part of what you want to look for, meaning you want to look at the general indexes, how are they doing? Then you want to look at leading stocks. So in the general indexes, let's just say if the S&P or the NASDAQ made a new high, we would say that the uptrend has resumed. Or if it had a follow-through day where the index rose maybe in 1.4% on greater volume than the day before, that'd be a follow-through day and would tell us that uptrends continue up to the upside. Now on the downside, I would watch for more distribution days. That may signal more trouble. Also, certain levels, I'd look to see if the NASDAQ can hold that sort of 4350 to 4370 level. On the S&P, see if the S&P can hold that 1938 to 1950 level. Those are the primary areas of support for the market at this time. Now, no major top has been forming because the Dow transports, the financials, the consumer discretionary, technology sectors, all these subsectors are moving in step with the general indexes. So that tells us we don't have any great divergence. The only divergence we do see are in the small cap stocks, the Russell 2000s, which have been basically lagging the market. And typically in a good bull run, you do want to see these small cap stocks participating. So last week, the Russell 2000, it cut below its 200-day moving average, reclaimed it on Friday, and it's right about there today. So that's something, again, to keep your eye on. Now, as far as leading stocks go, earnings season's been going on, and stocks that reported good earnings have been properly rewarded. And that's a very good sign for the market, meaning the market's not ignoring the earnings signals that the companies are giving us. For instance, Alcoa reported great earnings, a bellwether for the market. It continued higher. Intel, another bellwether for the market, continued higher. And today we have a few other important stocks after the close. That's Chipotle Mexican Grill, CMG, Netflix, Texas Instrument. Those are reporting today after the bell. So also take a look at those. Tomorrow, more important stocks. Apple, which has been a market leader since the April 15th bottom. So that's something to look at. Microsoft, all these old tech names that are acting very well, also reporting tomorrow. So, and on Wednesday, other important stocks reporting are Facebook and Gilead Sciences, one of our favorite biotech stocks. Throughout the week, we have Biogen, Celgene, Alexion, and more biotech stocks. So you want to take a look how these leading stocks, how they report earnings, what they are looking forward, and that's going to tell you everything about the market. As I've often told you, let price and volume be your guide, not anyone's opinion, not your opinion, and let that price lead you. If these stocks report well and the market rewards them, we might see some gap ups. There may be something you might add into, but again, let that be your guide. And I have to throw this in. Last week we heard from Federal Reserve Chairman Janet Yellen tell us how it was her opinion that perhaps some internet stocks or biotechs were overvalued, and they maybe bounced down a little, but most of those have rebounded, again, because that was her opinion. And I guess it's slightly ironic coming from someone who's in charge of the agency that's pretty much devalued our dollar, schooling the market on what's properly valued or overvalued. So again, all this is talk. Let price and volume be your guide. Watch how the market reacts to earnings, and you'll stay in good shape. This is George Kachuk, RCM Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Good luck trading.